Is crypto going higher from here, or are we at the end of the crypto bull cycle? I've spent the past few weeks researching and poring over data trying to answer this exact question. As somebody who's heavily invested in crypto and somebody who's done well so far, it's actually critical that I come to an honest answer based off the data and not based off my emotions or what I want to happen. It might feel good to feed yourself hopium and good vibes, but it certainly won't help you make money investing. So I tried to be extremely neutral and simply answer the question, will crypto trend higher over the coming years, or will it not? And after spending weeks pouring through the data and going over everything from the macroeconomic picture to demographics to the typical 4-year cycle, ETF flows, seasonal patterns, rate cuts, liquidity cycles, and more, I've come to a very firm and solid conclusion as to where I think crypto is going to go next. And I went really in depth on this because I really can't afford to be wrong on this because essentially my entire net worth is in crypto. And before we dive in, keep in mind this is just my personal thoughts. My channel is more of a giant Pinterest boards of my ideas and the things that I think about the market. This isn't investment advice, and if you genuinely want to be a good investor in the crypto space, you really should do your own research. Now, there was a lot of angles that I could look at when it came to trying to answer this question. And I started by trying to break down the factors that tend to affect the price of crypto most and work my way down. And I'll lay out all the data for you to judge and come to your own conclusion. First off, let's look at rate cuts. It's now widely expected that rate cuts are going to happen this month. By the time you're watching it, it's even possible that we've already had our first rate cut from the Fed. And these rate cuts are just the first of a larger rate cutting cycle. And rate cuts are really important as historically, they've actually had a pretty huge impact when it comes to the price of crypto. And this impact has historically played out in two phases. There's the short-term impact that comes from the market reaction, and then there's the long-term impact that actually comes from the properties of cutting these rates and allowing this liquidity to flow into the market. So I went all the way back to the 1990s and I looked at every single rate cut we've ever had since the 1990s until today. And since we didn't have crypto back in the 1990s, I have to use the S&P 500 as sort of a proxy to see generally how rate cuts affect the market. And the important thing to note there is that crypto is much more reactive to changes in global liquidity than the traditional markets tend to be. First off, we had rate cuts in the 1990s from 8% down to 3%. And the way that this played out is right after the first rate cut, the market just completely dumped. But then from there, it basically went up only for the next 4 years. And the market dumping when the Fed cuts rates is actually a normal historical phenomenon, but it's within a very specific context. So typically when the Fed is cutting rates, they're doing it in response to some poor financial conditions of some sort. Think of basically when we had COVID, we had all these lockdowns, we had all these supply chains getting shut down. The financial picture in the global financial picture was quickly deteriorating. And then the Fed decided to cut rates in response to this really bad financial situation. When that happened, the markets just absolutely tanked. But it wasn't because the Fed was cutting rates. It was because the entire global financial system was essentially melting down because of all these lockdowns. The rate cuts were just confirmation that all of that was real. It was it snaps people out of their slumber and they're like, oh my gosh, this is actually really bad. But the whole reason that the Fed cuts rates is to provide relief to the market, provide liquidity into the economy. And so, what we saw after those rate cuts, after that initial rate cut, was we had one of the biggest bull runs in all of history. Okay, so that's important to note when you see these dumps after the Fed cutting rates. Very specific to the underlying financial conditions and why the Fed is cutting rates. There was another batch of Fed rate cuts from 1999 to 2003. And this rate cutting cycle happened during the collapse of the dot-com bubble. And you can see at the end of this rate cutting cycle, the markets start to climb and essentially go up only until 2008. In 2008, we had the global financial crisis. I'm sure a lot of you guys remember this. And during that time period, the Fed cut rates from 5.25% all the way down to 0. And once again, when the Fed started cutting rates, we saw this massive collapse in price with the markets, etc. But again, the collapse in price wasn't because the Fed was cutting rates. It was because we had the 2008 financial crisis. Anyways, after the rate cuts ended, we saw the market once again essentially go up only from 2009 until 2020. And obviously we know in 2020 we had COVID lockdowns. This led the Fed to cut rates from 1.25% back down to 0%. And the Fed did other policies like quantitative easing. They printed a bunch of money. There was a lot more to the picture than just cutting rates. Again, when they cut rates, the market's dumped. But from there, this caused crypto and the stock market to absolutely skyrocket, leading to one of the most insane bull runs we've ever experienced. I hope I'm doing a good job highlighting the pattern here. Rate cuts unlock liquidity that flows into risk assets, pushing the prices higher. And historically, these rate cuts have 100% of the time ended with the market essentially going up only for an extended period of time, with maybe the exception being that for the 2020 rate cuts, we went up for 2020, we went up for 2021, but then we collapsed back down in 2022. And I'll highlight this was primarily due to the fact that the Fed started aggressively raising rates during that time period, which essentially has the opposite effect of a rate cut. A rate hike, or raising rates, sucks the liquidity out of risk assets, causing prices to go down. And in the case of the 2022 rate hiking cycle, it was the fastest rate hiking cycle in history, where they took rates from 0 all the way up to 5.5% in just a year. And all of this brings us to today. The Fed has stopped hiking rates, and we're once again about to enter a rate cutting cycle. And this is possibly going to be a pretty large rate cutting cycle, where currently we're at about 5.5%, and it's expected we could go as low as 3.5%, which is massive considering the rate cut that kicked off the last bull cycle was just from 1.25% down to 0%. It's also worth noting that all the liquidity, all the money printing that happened in 2020, all that liquidity is still out there. We may not have a new round of money printing this time around, but the money printed last cycle is still there. It's still out there in existence. It's just that currently it's sitting fat and happy in these less risky assets because interest rates are so high. When rates come down, those less risky assets are going to become a lot less appealing. And at least some of that liquidity is going to seek out higher returns in more risky assets like crypto. So rate cuts are extremely bullish for crypto, although it might take a little bit of time for it actually to kick in and for that liquidity to be able to flow into these risk assets and push up prices. And this rate cutting cycle could potentially be extra bullish considering how much rates could be cut and all the liquidity created back in 2020. So that's rate cuts. As a second metric, I looked into the typical 4-year cycle pattern for crypto. And I've already covered this pretty extensively on my channel. I've gone really in depth into the 4-year cycle pattern and how it works. So I'm not going to spend too much time on it here. Historically, crypto has followed the exact same 4-year cycle pattern. And this pattern historically has been accurate 100% of the time up until this point. And looking at this pattern, it suggests crypto should start climbing in the late half of 2024, specifically starting at around late September or October. We should see crypto prices to start to climb. And we should see a top in the crypto markets at some point in late 2025. Now, there is some interesting data around liquidity cycles and how these have historically lined up with the 4-year cycle. And it looks like this cycle, there's the potential for liquidity to be peaking a few months later than it might otherwise peak in previous cycles. So that could mean there's a potential for all of this to be a few months slower than we typically see. But either way you look at it, overall, if you look at the 4-year cycle, if you look at liquidity cycles, that also appears to be overall a very bullish setup that's in favor of crypto doing well going into the future. After that, we have the ETF flows for Bitcoin and ETH. The flows have been record-breaking so far and have the potential to push prices a lot higher if the crypto markets can get some decent market momentum. And it's worth pointing out that the biggest unlocks for these ETFs are still to come. The vast majority of institutional capital is still on the sidelines when it comes to the ETFs. They have to work their way through various due diligence processes before they can take up a position in one of these ETFs. And you can see how this could potentially play out via the gold spot ETF chart. When the gold ETF was approved, it built up steam over years, not months. In fact, it peaked 6 years after the ETF was approved. That would be around 2030 for Bitcoin. And if gold is any indicator, it could mean we see Bitcoin and ETH and crypto as a whole go much, much higher over the coming 6 years. Now, I still have a ton more to cover, including seasonal patterns, government spending, and maybe the most revealing of all, demographics, which I believe demographics paints a really clear and strong picture and maybe has the most weight out of any of these things in some ways as to where crypto is going to go from here. But first, really quick, the Obsidian Council is my private research community where I share monthly research, my entire portfolio updated monthly with the exact allocation I bought and a ton more. We've had projects like Pendle, which went up over 1,500%. Projects like Solana, which is up over 740%. Akash, which is up over 1,000%. And recently Goon, which went up over 179,000%. Although, as a quick disclaimer on that last one, 179,000% is insane. We got really lucky with that one. That's far from normal and unlikely to repeat or happen again. We also have the airdrop guide, which some members made over $26,000 last year from airdrops alone, covering their membership for literally decades. I've personally made well over 100K between this year and last, and I share everything I'm doing personally with airdrops with the community via the monthly airdrop guide. And it is worth noting that airdrops platforms have slowed down recently, and I'm not 100% sure where they'll go from here. I'm watching that space really close, and of course, I'm going to end up going wherever the opportunity is. I just opened back up the OC to 75 new members. There's a link in the description of this video. Last time we sold out in just 20 minutes, so it's possible by the time you're watching this video, it's actually already sold out. Just check the description. If there's still a link to sign up, then there's still spots open and you can sign up. However, once we hit the cap, I'll be closing it back down and you'll have to join the waitlist and hopefully get in next time. So on the tech front, crypto has made some significant progress, making crypto much more user-friendly, cheaper, faster, and easier to use. But to be honest, it's hard to say if we've made enough progress and improvements to onboard the next wave of users into the crypto space. Last cycle, DeFi was like a brand new thing. Like DeFi didn't exist the cycle before that. So you had this new exciting thing. People were excited to come try and use, and it brought in a lot of participants into the space. And it feels like every cycle we've sort of had some sort of catalyst, some sort of breakthrough in the crypto space that brought something new and fresh. And it feels like this cycle, there hasn't been like a clear-cut thing like that. We certainly have better wallets, improved UX, and tons of fast and cheap block space. We also do have apps like Polymarket, which have gained wide mainstream adoption. I'm just not sure if that's enough to justify bringing in a whole new wave of crypto users. Like, is that exciting and enticing enough for like new retail users to be like, oh, cool, I want to come check out these improvements that have been made across the board in the crypto space? I personally don't know the answer to that, and this one's at best really unclear. I will say though, like over the long-term picture, crypto does have billions of dollars worth of funding, and even though I feel like at times that funding is used very inefficiently, it does just mean that inherently the crypto space will continue to grow and get better and innovate because there's just a lot of funding left to continue to grow and innovate the space. We also, this cycle, have had apps like Pump.Fun, which within its first 6 months, it brought in $100 million, which is crazy. Like for any startup, any company to launch and within the first 6 months, make $100 million in revenue is insane. And I think once that's more widely known and like widespread, that should attract a new wave of builders trying to build new innovative apps. Because Pump.Fun was a new innovative app. When it came out, it was like, oh cool, let's build a launch pad with guardrails for meme coins. And it's kind of a new thing that crypto hadn't had something specifically like that before. So maybe that'll inspire other builders that are really talented to come to the space and kind of put their own unique spin on things that they could launch with the enticing reward of, maybe they could make $100 million within the first year of launching their app. And I think a lot of the building in the crypto space or lack of building and innovation does happen to be really heavily affected by regulation. And people kind of being afraid to come build within the crypto space because they don't want to get like sued by the SEC or go to prison because they build something the government doesn't like. So I think regulation as a whole has kind of been a dark cloud over the crypto space, really suppressing growth and innovation in the crypto space. But it does kind of feel like we're through the worst of that, and we're finally getting primed to get some clear rules and regulation around the crypto space that's more favorable to crypto. And not to get political, I know that can be polarizing, but just looking at the facts, it does appear very strongly that Trump would be the much more pro-crypto candidate. Him and a lot of his advisors around him, like RFK, etc., are very pro-crypto. And I think that would be overall very positive for crypto regulation, but I think the future would be a lot less clear under a Harris administration. The Biden-Harris administration has been extremely hostile towards crypto, and according to the early evidence that we've seen so far, it appears that the Harris administration would be at least as bad, if not possibly worse on some positions when it comes to crypto. So this one is kind of a bit of a mixed bag because right now the odds for both of them are tied, so it's like a coin flip which way the election could go, but it does mean in November we have this really strong catalyst for crypto for a lot of positive and good change if Trump happens to be elected. And overall, if Harris was elected, I don't think it would be like a crypto killer. We've survived a lot over the last 4 years. We've become a lot more coordinated. Crypto has a really strong lobbying arm within Washington, D.C. now. So I don't think it would kill crypto. It just would be stifling in some ways. Next up is government spending and monetary debasement. As of now, the U.S. government shows no signs of slowing down when it comes to spending beyond their means. Well beyond their means. Government spending has been accelerating for a long time now, and our debt just continues to balloon to like record highs every other day. Just like the debt continues to go up and up and up. In fact, we currently pay almost $1 trillion just to service the interest on our national debt. This means more and more inflation and the continued erosion of the US dollar's strength. Crypto was built to be a free market alternative to government-run financial systems. And I believe as government spending and dollar debasement accelerates, the adoption of crypto will accelerate as well. In fact, Cynthia Lummis, which is a senator, I think from Wyoming, recently introduced a bill for a Bitcoin national reserve where the US government would keep the Bitcoin they have on their balance sheet, which they currently have some Bitcoin on the balance sheet from seizures. And on top of that, purchase more Bitcoin to hold on the US government balance sheet. And she makes a really interesting case for as to why the US government should be doing this and why other countries will inevitably do this. And it really comes down to the fact that you have all these countries that can print unlimited amounts of their own money, and you have things like Bitcoin, you have things like Ethereum, you have all these crypto assets where governments can't do that. Like nobody can print unlimited amounts of it. So it has like this neutrality, this credible neutrality that these fiat currencies don't have. And that makes, at least one senator comfortable with putting that on the US government balance sheet. And in her mind, that's a way that they could actually pay off the debt over time. She has this whole thing where like she gets 1 million Bitcoins on the balance sheet that they'll be able to pay off over half the US debt by 2030 or 2050 or something like that. I don't know if that's the case, but I think it's really bullish that you have at least one senator. And you also had RFK, you have Trump, who also wants to do like a Bitcoin reserve for the US government. You have multiple people in government that are at least thinking about this, talking about it, and at least one senator that's introduced a bill for this. Finally, we have demographics. And I think this is maybe one of the strongest cases for what will happen next with crypto that there is. We're in the midst of what some economists have termed the great wealth transfer. Over the next 20 years, $84 trillion will transfer from the older generations to the younger generations. Older generations obviously have some difficulty understanding the internet, new technology, social media, and they really have difficulty wrapping their head around and understanding crypto. And because of that, currently the biggest buyers of crypto by and far are people under the age of 65. Like by and far, like most people buying crypto are under the age of 65, yet the vast majority of wealth is held by those over the age of 65. But when the older generation passes away and the younger generation inherits that wealth, you have to ask yourself, what is that younger generation most likely to invest that wealth into? Are they more likely to change their habits, suddenly become less interested in crypto, and become more interested in traditional investing? Or is it more likely that they're going to take a portion of that inherited wealth and allocate it into crypto, a space they already know, love, and understand? It is my belief that they're going to use a portion of that inherited wealth to invest into crypto. I mean, I am part of this generation. I know exactly what I would do if I got a massive inheritance of like a ton of money. I would maybe not invest all of it into crypto, but I would certainly invest some of it into crypto. And I know I have friends that would do the same. And I believe as we have more capital that rotates into crypto, we'll see more and more assets get tokenized as traditional markets try to adapt to a new generation holding the majority of the wealth. After all, generation to generation, a lot of things tend to change. It used to be that newspapers and TV dominated the game, but as we've had this generational rotation, that has changed over time. And although today traditional markets do dominate the investing game, I believe as more wealth rotates from the older generations to the younger generations, there will be more and more incentive to tokenize assets and follow the money. Even those in the traditional markets, like CEO of BlackRock Larry Fink, see this tokenization process as inevitable. And this demographic setup, to me, makes it extremely clear that it's very unlikely crypto is going to disappear anytime soon. And this trend should be a massive driver for price appreciation in the crypto space over the next 2 decades, on top of everything else that we've talked about in this video. And I know a lot of you guys are probably thinking, well, this is great that crypto over the next 2 decades has this huge price driver, but what about over the short term? Are we going to correct 90% from here before we see that price appreciation? Like, what's most likely to happen directly next? On a shorter time horizon, if you look at seasonal patterns, there's a very strong and consistent historical pattern that shows crypto tends to perform better in the winter months, specifically October onward. In fact, historically, every parabolic rally that we've ever had has started in either late September or in October. So currently we're heading into a historically very strong season for crypto, starting in October, where prices tend to do really, really well. At least in the past, as a historical record, that's been the case. And that has been and remains, in my opinion, what's the most likely thing to happen in late 2024 is that prices should do well from October onward, and we should see the start of that parabolic rally starting in October, where prices start to climb pretty drastically. Obviously, there's a chance that I'm wrong about this and the 4-year cycle is broken. We're not going to see it the same way that we have in the past, and this is going to be a whole new paradigm for how crypto operates. And I'd actually say that that's a decent probability. Like It's definitely possible the 4-year cycle is broken this time, and we don't see the same outcome we've seen in the past, and we more like continue to grind upward over the next year, 2, 3, I don't know how long, but kind of the same environment we've experienced over the last 2 years. It just kind of keeps doing that. Like, there's no massive retail excitement where a ton of people come back. There's no like massive parabolic run up in the way that we've seen in the past, but it's more of a quiet, slow grind over time. Again, that's not my most likely outcome. My most likely outcome, based on the evidence I see, that we have the same 4-year cycle that we've had in the past, and it follows about that same trajectory. But I'm definitely prepared if that doesn't happen and we have more of this slow grind outcome. Like, both outcomes are good. Like, in both situations, crypto goes up. I'd rather have the parabolic rally because my portfolio is more positioned for that, but I'll still do really good if we have the slow grind up. And overall, my conclusion after doing all this research, looking over all these data points and looking at the really big picture for crypto, I think crypto is primed to head higher over the coming years. I think, of course, that we'll have pullbacks, and I would expect some pretty big pullbacks along the way. But overall, if you look at the big picture, I don't see how anyone could come to the conclusion, any other conclusion, that we're going much, much higher from here, that the crypto as a whole cannot be stopped. The spice must flow, and we are going to continue to go up over the next 2 decades. And, whether that means short term we go up and then go down, or how we get there, I don't know. I don't know what's going to happen between now and then. But I know over the long term, being invested in crypto, based on those fundamentals, I feel very strongly that I'm going to be at a higher level over the coming years than I am today. And as always, none of this is investment advice. None of this is me telling you to invest in these things. You have to take personal responsibility for the decisions you make, because I'm not your dad. I'm not your investment advisor. And if you can't learn to take personal responsibility for the actions that you personally take, you are just not going to make it. Make sure to sign up for my free weekly crypto newsletter. It's mostly just all my content I put out each week and an easy email so you don't miss it. But occasionally I do drop some other cool stuff in there. As always, if this video is helpful, make sure to hit that like button. If you have any questions or comments, let me know in the comment section down below. If you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.